Now the example in this video now deals with what happens when you sell an asset for more than the original depreciable value of the asset. Now this problem we're working through now, the original depreciable value was $100,000, salvage value was $20,000, and the economic life of the assets 8 years. Now what we're saying in this problem now is that 5 years have gone by, so we depreciate the asset for 5 years. But somebody's come in after 5 years and wants to buy the asset from us, and they offer us $110,000, and we sell it. Now, how do we go about calculating the tax consequences of that? Well, in this particular problem now, is we're going to sell the asset for $110,000. The tax rate on marginal income, ordinary corporate income for the company now, we're saying is 30%. And the capital gains tax rate on this transaction would be 15%. So because we sold the asset for more than the original depreciable value, indeed we're going to have a capital gain. And so if you take the sale price, $110,000, subtract out the original depreciable value, $100,000, you're going to see a $10,000 capital gain that you're going to have to pay taxes on. The other type of gain is called depreciation recapture, and that occurs when you sell an asset for more than book value, but less than the original depreciable value. So the difference between the original depreciable value, $100,000, and the book value at the time of the sale, which is $50,000, the difference there is going to give you what's called depreciation recapture. And in this case, the depreciation recapture is $50,000. So once you define the gains, the different types of gains that you have on the sale, depreciation recapture is taxed as ordinary corporate income at 30%. The capital gains is taxed at a capital gains tax rate. So if you take the capital gain multiplied by 0.15, 15%, you get $1,500 in taxes that are owed on the capital gain. The depreciation recapture in this problem is $50,000. Multiply that by the marginal tax rate on ordinary corporate income, which we're saying is 30%. You owe $15,000 in taxes on depreciation recapture. All summed up, you owe the IRS $16,500 in taxes because you sold this asset for $110,000.